In today's Isaac Finance video, I'm going to be showing you the trade I'm in today, what I'm expecting going forward for the Bitcoin price action, and most importantly, the levels for support and resistance, okay? So without further ado, let's jump straight into the charts. We're going to start with an empty canvas, and I'm also going to show you the position I'm in so you get a good idea of what I'm seeing in the chart and what I'm going to be expecting going forward, okay? So if we just pivot to my Bybit account, you can see here, I'm on the Bybit Bitcoin Perpetual USDT. So I took a trade here a little bit later than I would like to. I was asleep at the time when we hit this level, but I took a trade here and I'll explain as to you why I've taken this trade, also why I've taken profits and why I'm still leaving a little bit left over. Okay, so this position in total was around a $90,000 USDT position. I've since now downsized it to around $47,000 USDT position, okay? So I'm going to explain to you why I took this, why I've taken profits, and what I'm expecting going forward for the price action. So if you want to follow me, we're going to jump straight into trading view. So if you can see here, we are on the TradingView Bybit Perpetuals. So this is just Bybit USDT, but BTC USDT. So we're going to start on a blank canvas and identify the levels of importance and why I took this trade and the reasoning as to why I took it and what I'm expecting next, okay? I would just like to highlight, we are coming into the end of this month with a very, very weird doji candle here, you can see. The candle is, right in the mid-range of this range here. So very indecisive and we'll have to see what happens. But let's just mark out what levels we have of importance. So I like to start with primary levels. So primary levels are levels of open closes. So let's just do monthly. Like this. No other monthlies of importance there to me. I'm going to be quite fast with this, guys, so just follow along as I go through. Here we go. Let's chuck on the weekly. So we got a weekly down here. We've also got a weekly up here. So this is all part of formulating a plan so that we can then take a trade based off what we're seeing from levels of importance. Because at the end of the day, as a trader, we don't know where the price is going to go. But what we do know is our levels of significance. And when we reach the levels of significance, that's when we can then place a trade based on the reaction at the level. Now, moving into the daily, let's see what we have here. So levels of importance. To me, we have this one here. This is going to be crucial to that daily. Coming in around there. 14,500. We've got a few levels down here. Let's have a look. Nothing of importance. I think, to me, this weekly is more important because it's got volume near it. So you can see here's a volume cluster. That's just this region here, okay? Everything's region based. I trade with regions. I don't really trade with like exact levels. That's how my style is. Okay, so we have our levels of importance here. Let's just highlight that. So that's high term time frame levels. So that's HTF. That's what it stands for. So next up, what I like to do is volume, because that's going to give us an idea of what we're expecting. So a volume pull from this region, from this high to this low, we can see we had a lot here, we had a lot here, we got a few gaps in between here, and the next one's at $121,000, okay? All right, so that's obviously why we had a bit of resistance coming into that, and then since we've broken above that, okay. So anything of importance here, I would say there's a few levels here that are, you could view these nearly as single prints in the sense that there's not much volume in this region. But right now it wouldn't be that big of a deal. People would look at this and say, oh, there's a fair value gap right here, which has been tapped a little bit, but the 50% range hasn't been hit yet. So that's obviously what was hit here, I think, when you go right in the middle. Also a reason why I took that short position. All right, so if we copy that same thesis and move it down here, let's see what we have looking like. Move to the 4 hour so we can get a good idea. Volume. So volume coincides very closely with the weekly. We've got volume here at 111,000. And interesting enough, we've also got a CME gap. If we go BTC1 exclamation, we've got the CME gap coming in around 111,000 here, okay? So we can see we got that there. So that's obviously going to be a level that the market is inclined to come towards. That's why I'm still keeping my position open. But I did take profit because I do think we are in a local support region. So you can see here, volume, high, support, coming into that region there. So a little bit of a safe take profit. So you can still see that position is open. 500 Australian dollars for 363 USDT, respective. So stop loss is just put to break even, so I can't lose in this trade anyway. That being said, I do expect lower prices to come. If we were to range break up, it would definitely be possible, but I wouldn't be expecting it as of right now. Okay. 111,000. I'm going to be honest with you. I do think we have a very important level down here. So this level here, it has been slightly tapped. We had to push into it. But I think it lines up very nicely because we've got a value area high of this region. We've got a high, resistance, break. So that's going to be, to me, a very important level. So let's highlight this, guys, in your charts if you want to. This will be a level of, let's just make that so you can see. This will be a level of support for price. A lot of traders will also be looking at this coming into this region, take out these lows, enter the fair value gap here. So FVG, that's what they'll be looking at. So you might have reaction off that level. So it's a good TP level if you do reach that, okay? I'm just trying to mark out supports. We have a nice one down here, so you can definitely mark this one here. In this region, I wouldn't say there's anything special. Let's pull some Fibonacci's. We've got a Fibonacci pull from here to there. If we do end up making that to the top, then we can climb our way down. That being said, who knows? Right now, you can't speculate too far. Yeah. All right, so I'm pretty set on 111,000. I'm pretty set on 108. Let's zoom in more. That's mitigated. We've got levels here. Have a look at the volume while we go in here. All right, so what's obviously clear for this range, if we just want to zoom that in, we can see, let me just take these glasses off. Actually, no, you're not going to wear them. We can see that we've fallen out of the range here. So we were trading in this range. You could view this as, let me view that here for you guys. You can view it like this, in my opinion. Like that. Yeah. Some could say we're in the lower of the range. Resistance, midline, retest, rejection above the high, midpoint, come back to the top of the range, come down, break down, hit the daily, come down again. So to me, a sign of strength that we're going to be heading high would be claiming above this daily, and then obviously having some sort of support base off that 114,500. Until we see that, let's just remain calm and not worry about what's going to happen right now. So we are still in the range and it is valid right now, the structure. We've also had a fair value gap here hit. So people would look at that and be like, yep, that's been a hit fair value gap. That being said, I'm not too sold on that, specifically that sort of level. It's not really like I wouldn't be putting significance on that. So that's going to be the support. Let's look at resistance for this little range here. Two things you can do for resistance are going to be VWAPs. So that's one thing you can do, VWAPs. So we got one coming around at 115 and then one at 114. Obviously, they will converge as time goes on. So it would be something like this you'd be looking at. And that's why I'm saying you'll probably expect to see something like this instead of that. A reclaim would be bullish. That's why I'm sort of saying that, right? And then one other thing you can do that is very valuable is just a volume pull. So you can see volume here coincides at around $115,000. So you'd be looking at rejection down there if we are to put a local top in. Now, you know my position, guys. You know, you've seen what I'm in. You can see what I'm currently doing. So it's all open to you. Now, I want to explain why I took this trade, okay? So at the time of this trade, we had a swing high here. So there's resting liquidity above this high. There was also resting liquidity above this high. So when you form like this premature high that we formed here, we had a rejection, we start climbing right back up. It's really, really, really likely that we're going to take out the next high above it because it's got a lot of liquidity there. And one of the tools you can use as a volume is an order flow chart, right? So let's have a look. So see this candle here, this one here, that candle is this candle right here. And then this candle here is this candle here. Okay, so let's have a look at what both each candle was doing. So if you look at this candle, we saw that we had 9 million shorts closed, which means they had the buybacks. That's a short squeeze. We then had $20 million worth of a short squeeze here at this high. So short squeeze, price trades sideways, creeps up, takes out the next high. Very, very likely that we were going to do that. That's why I took that trade expecting a continuation to the downside, which we've seen. Obviously, I was really late. I entered around here. You want to be entering pretty much at the swing high. So if we zoom in on the 1 minute chart, let's have a look, right? So your price came up, took out the high, came back down, took out the high on a much larger scale. And the reason you probably wouldn't just enter this specific wick is because that specific wick was this one right here. So let me just explain. This is a bit more in depth, right? This specific wick that we took out the highs, people would view that and think, oh, we've taken out liquidity, therefore, we're going to reverse. But that's not necessarily the case, because we also saw $4 million of shorts enter with positive open interest. Now, that's not what you want to see for a top. You don't want to see shorts. You want to see either longs entering at the top, or you want to see shorts getting squeezed out of their positions. Okay, that generally signifies a local top. So either those two. That's why it was expected that we're going to have a higher push, which we saw, and it had that subsequent stop out of all those positions. And then we went to the range down, bounce back up, range down, bounce back up, and then we resumed to the downside, okay? So that was a very, very, very technical trade, and it's called a swing failure pattern, a failed auction, you could say, right? So we came up into these highs. So these are supply highs, right? So supply highs are here. We came into them, had that sharp rejection, and then had that subsequent down push of like 1.5%. And then in total, it's been about a 2.4% move, right? So that's a very, very good trade you're looking at. People would also look at that and think, oh, we've got a head and shoulders pattern, right? You can see that here. Shoulder, head, shoulder to the downside. Your target on that specific trade would be something akin to this, which would take out these lows here. So it's very possible we do that. We're going to take it step by step. That's why I've taken half my profits out in case we do that. Or if not, we stop myself out. But regardless, we had a technical trade, and I took that technical trade based on the technicals. So I hope I've highlighted what I'm looking at for right now locally. And I just want to show you some points in your chart you can highlight. So points in your chart you should definitely highlight. I would say this region here. This region here is the level to be looking at. And the reason I'm so broad in my region is because when price reaches the region, that's when you open up your order flow, because your order flow is going to tell you what's happening, right? You can't sit there in a very arrogant perspective thinking, oh, it has to hit my exact level to the dollar and I'm going to then take profit or take a trade, right? So I would say highlight that level, that's very important. We got a level down here, which is important because it's also volume heavy. Yeah, volume heavy down there. We've literally just taken this high. So that was the level I literally highlighted, I think myself anyway. So that's already done, which is why I'm in the trade. It's too late to enter now, in my opinion. Other than that, like, it's literally this or that. That's what I'm expecting, right? So price is either going to, in my eyes, continue ranging and then go upside, or we're going to go probably down lower to around at least the CME gap, which is around 111,000, right? And then if not, we're going to go down here for some stronger support. So yeah, that's what I'm currently expecting. At the end of the day, it's going to boil down to what's the order flow saying. So what's it saying right now specifically? Well, we're seeing price range down. We're seeing open interest decrease. We're seeing shorts increase. So that's just longs closing. Longs are just closing their positions, which means they have to sell in the market, right? So that's not overly bearish. That's not overly bullish. It's just neutral order flow. That's why price is doing wish-washy price action right now. So you can see it's literally just ranging, right? And that's what you'd expect when you're in this, when your order flow is suggesting that, which is why I've taken my profits on my trade, right? So I took profits here. If we stop me out, that's absolutely fine. But I'll just take it as it comes. I'm not going to stress. Like, the last thing you want to be doing is stressing, right? That's why you're going to mark your levels out. And I'm literally not going to touch the chart until we either reach here or here. Or if I find a scalp intermediary trade, sure, I'll take it. But other than that, I don't think there's anything valid to be looking at in this chart. Other than you're either in a short from that swing failure high, or you're going to be looking for a long, or a short. So those are your only levels I'm going to be looking at. And then obviously like 111 is very important because it's the CME gap. So yeah, that's what I'm expecting. So guys, I hope that was clear. Now my positions aren't huge. I'm only using I'm using a solid size, like $100,000 is solid. But like, at the end of the day, this could get stopped out, and I'd be taking home around 400 Australian dollars because I measure in Australian dollars because I'm Australian, right? Or if I could take profits now, I'd be walking home with around $800 or so, right? Because you got 340 plus that. So it is what it is. Take as it comes. Obviously, it would have been a way better entry if I entered right at the top, but I didn't enter at the top because I was asleep. That's the problem when your time zones are all wonky. That's why marking levels out and creating alerts is very important, and being patient. Don't overtrade. That's one thing you'll learn. If you overtrade, not good. So yeah, I hope that was clear, guys. And yeah, I hope you understand what I'm looking at in the price action, and what to be looking for going forward. And yeah, anyway, guys, I hope you have a fantastic day. I'll catch you guys in the next Isaac Finance upload I do. For now, catch you later.